What's interesting about growing your market share? I mean, many companies really do believe any growth is good growth, but many of these companies don't have any specific tools or data to measure their market share. I mean, what is market share? And this is especially true for smaller companies. So without any matrix, the focus always goes to doing more marketing, more sales. And well, these activities, they're all well and good, but those challenges associated with any approach that doesn't use data to back them up, along with the expenses that are going to come with doing more, it's just a waste of time. At our firm, National Diversified, we work with companies to help them grow share of the market in the right places where they're more likely to get a return on their investment and keep them away from using a shotgun approach. So what should you be doing with your company? What should you be looking at? Well, the approach we take at National Diversified Funding post-acquisition is we provide recommendations to our clients. We're going to help them focus on increasing their market share by using more of the territorial approach and then say looking at the market segment. So here's an example. Let's say I'm working with a company and they make machinery that digs ditches. Now that doesn't sound very glamorous, but I'm not necessarily in glamorous industries. Some of them get deep in the dirt, literally. So they want to grow their share. What we have to look at is what regional differences are really going to make it more lucrative to sell their particular type of equipment. It turns out there's really a lot of regional differences, and then we look at it by segment, and the segment means where are they more likely to penetrate in the market. So we might look at utilities, we look at telecom, we look at oil and gas. So we're trying to figure out the formula that look at their market share with the least resistance. So take that thought. You don't want a lot of resistance when you're looking at trying to generate market share points. And the other thing that you need to look at is what's the relative size of what you're looking for. Like, how big is that market, the market that I'm shooting at? How big is it? So again, the data has to be dug up. Sometimes we use modeling techniques, but at least you get a relative idea of, are you looking at a £1 million market, or are you looking at a £15 million market? And that might help you decide how much you want to spend to pick up a few points in it. And then I always want to target areas that are in competition with us. So if you think about it, you can increase your hit rate rather at the same time that you're increasing your presence in the market. And this is actually kind of a formula that we created to define what amount to invest. So you look at the product, you look at the presence, the marketplace, you look at the hit rate, and we can actually predict the market share points you can achieve from that effort. So to get the most out of this process, you have to know where you want to go and just need a little bit of help getting there. And it's not that we don't help companies that are really in the dark and they come up with the great product or service and they say, okay, we've got this great idea and we've got a prototype and we're ready to go with it, but we can't figure it out who we're going to sell it to. And believe it or not, that actually happens. It's ill-advised. I mean, the formula that we put together, it takes the product into account. So we ask for traditional customers' needs questions like, are you selling the right features? Is it priced correctly based on your value proposition? But then we also add these factors of presence, like which segments do you need to get in front of? What are the channels that you need to use to get there? And then we look at the hit rate. So if you have what I think of as a good product and you're in the right place, then what is it that you want to do to win? And how often do you win? This is collectively like your hit rate. What's your win to loss ratio? Your win to loss rate? So we put those things together and we can actually predict the direction that you're going in. We can predict the market share gain when you start turning the knobs on each of those things. And the numbers really do tell a story. I mean, one of the things that I see is some companies who have some data actually available to them will create a national market share estimate. So let's say they are a £10 million company and they've got some estimates that say their digging market is 150 billion. So they are up for, say, half of 6 to 7% market share. Okay, and unfortunately, what we find is they probably don't have a 6 to 7% share in any given territory. Maybe in some markets they have a 25% share, and in some markets they have a 1% share. I mean, it's so important to know where the markets are, like where you're weakest, and then you can go into that approach of trying to find the weakest competitors. And secondly, I'll say you shouldn't really overlook the smaller geographies. You think the big market, the big money, but sometimes word of mouth, local presence, they work hard, they work better in smaller market and could actually be more profitable. And I think, I'd say that you don't really want to jump on the pricing wagon right away to try to buy a market share. One of my clients came to me after they did this, and while they actually did pick up some share by beating their competitors by 20%, it was a struggle for them to get out of it when they tried to introduce their next product line. So so this is something that can happen. There are ways to do it quickly, but I certainly try to promote the idea of doing it at a more territory segment approach and then being smart about the matrix.